for an institutionalist like me, I liked Bitcoin at 20,000 or 30,000 more than I liked it at $400 a coin because of the scaling nature of it and the potentiality for exponential growth. So I'm a little more cautious than the Winklevosses, but I think our entry point will have proven years from now to be quite wise.
When I first came, I was definitely a Bitcoin hodler. You know, I just buy and hold, and I still do. That is my personal choice and investment strategy with regard to Bitcoin. But I have come to appreciate the opportunities that are created by the Lightning Network, which I knew nothing about when I was sworn in last January. And stablecoins.
When you're dealing with other people's money, which is what stablecoins fundamentally are about, you want to be careful. We all want to be careful. And there are some areas where we want really unfettered innovation. Move fast, break things, iterate. That's what you want. With regards to stablecoins, I would argue that is not what you want. You want your money to be stable. You want it to be reliable. You want it to be there in good times, in bad times, and not have to think about it.
Yeah, I think we need, thoughtful and good regulation. I think that sort of expecting a kind of Wild West deregulation isn't necessarily good, because it doesn't necessarily create certainty, because then you can have sort of situations that then cause a sort of backlash and overly strict regulation, right? So it's really a matter of striking that balance where the good regulators can interact with sort of the good, legitimate, decentralized projects to figure out the right approach, because it's a difficult topic ultimately, because the decentralized nature of decentralized protocols.
And for somebody like Elon Musk, who knows that there's a market impact, to manipulate, first take an individual position into Bitcoin, pump the price up, and then say that Tesla has invested and Tesla doesn't make money yet, it's also irresponsible and it's market manipulation.
It's not irresponsible for any corporate executive to convert a weaker asset into a stronger asset. It's not irresponsible to avoid burning 25% of your shareholders' money every year. So I think that the challenge with the critics is they don't offer a constructive solution to the problem.
Ultimately, Coinbase will have competition, has competition, and that competition will increase. But I also think that Coinbase is now going to be able to effectively compete with not just the other crypto companies, but the Wells Fargos and the JP Morgans of the world, and that's just a much bigger market. So I think for whatever competitive risks exist for Coinbase in the crypto space, I think they're going to run circles around the JP Morgans of the world.
I think for Coinbase, they pretty much have the majority of the US market, and US is a big market. And if you look at the future of finance, future of fintech, and I think Coinbase is going to be one of those instrumental companies in the space. And I think the valuation is quite low.
Well, listen, I mean, you take the role for obvious reasons, which is this is the company that's most likely to give, the biggest incumbent Coinbase a run for its money. It's the best opportunity to build a fully compliant but product diversified crypto platform in the US. So it's an incredible platform to come and launch things in the US the right way. There's nothing more excited me than that.
Have you considered taking part of your salary in crypto?
It's definitely, at the end of the day, technically that can't happen. They can't pay their athletes, what they pay is in dollars. But how you invest your money, absolutely. So I definitely think there'll be more solutions as this is more widely adopted in all areas of our lives. And how we pay for things now is very different than how we paid for things when I was a kid. At the end of the day, it's transactions and how they're happening, between people in the space of 3 or 4 feet. It's not exchanging dollar bills anymore. It's passing along technologies that are allowing people to wire information and wire amounts to people's devices and so forth. So the world is changing. We all have to understand that's just the way it's constant change, and you could be ahead of the curve or behind it, and I'm choosing to be ahead of it.
From our seat, we're certainly wanting to be ready and willing to engage in creating an ETF when regulatory approvals, start to pop up and give us those, signals that they might be ready to change their attitudes around Bitcoin ETF specifically.
I don't see the first ETF coming until we have the regulatory environment to approve it, and also we've solved the ESG issue. So The answer is no time soon. People that are thinking it's coming this year are wildly optimistic it won't. People that think it's coming next year also too optimistic. I'm thinking
go to the Canadian exchange in North.
you can do. It's compliant in Canada, but I think the real opportunity and another $1 trillion worth of buying would be when we get a US-based ETF for both Ethereum, maybe another chain, in an ETF.
With a new industry like that, and it happened with Bitcoin, and it happened with the internet, and it happened with computers, they start and they go up, and then they're discovered, and everybody thinks it's the greatest thing in the world, and it gets this hype monster going, and then it falls because the promise of it wasn't fulfilled day one. But then the engineers are doing all their work, and slowly but surely, 2 years later, all of a sudden it's better than anybody ever imagined, and it just goes straight up. I think that's true. That is definitely true with Bitcoin. It got hyped up in 2017. It came crashing down, and now it's more than fulfilling anybody's vision of what it could be. And I think that same thing's going to probably happen with NFTs.
I don't think democracy or open platforms or decentralization means everyone should win, right? Like, I'm a byproduct of winning on social media. Hundreds of millions have tried to win on social media and haven't. I kind of love that. I actually think the market is really kind of cool. Like, just because there is NFTs doesn't mean that you're going to slap some pretty piece of art on there and then you're Michelangelo. There's a lot of work that goes into actually even having a chance to succeed.
Studios sometimes force feed you content. Like there is a world where your options are oddly limited, where they try to predict what it is that you're going to like. And so you kind of get like these 7 options and that is what you get. And so we're trying to, I guess, find a model where we're going to allow, by people being able to purchase the NFTs, to dictate what they want to watch. So the NFTs that you buy is the content that we would create. Ultimately, it's like what came first, the chicken or the eggs. And so we're trying to kind of see what this version looks like. If people purchase the NFTs, or rather when people purchase the NFTs, then that'll only make the show more successful. The more successful the show, the more successful your NFTs. So it goes hand in hand. So you do ultimately, as a viewer, have ownership within the content and say within the content.
And we're going to do something again that's innovative. We're breaking this news on your channel. We're going to be the first city in America to give a Bitcoin yield as a dividend directly to its residents. So we're going to create digital wallets for our residents, and we're going to give them a Bitcoin directly from the yield of Miami Coin.
They're afraid and they're concerned because if we succeed, as I said, a lot of countries are looking at us and they will follow, our leadership. So it's a different way of, financing our government, and we'll see. I think that the cabinet, they're very smart. Our economic cabinet, very smart. They're looking different.
Is an IPO in the horizon for FTX?
It's something we've been thinking about. We might or might not end up doing it. On the one hand, it would be a big production and, it would take a lot of time and energy. On the other hand, we think it could provide a lot of value to the business. We're fortunately in a position where we don't need it in terms of fundraising. We don't need to raise. First of all, we're profitable. But second of all, we're able to raise in the secondary, or just in sort of, private markets, if we need to. So it's not a necessity. We're trying to be in a position where we could do it if we wanted to.
Are you saying 1 million Bitcoin in 10 years, or where's that go?
I think eventually Bitcoin as an asset class becomes $100 trillion asset class. If it replaces gold and it replaces digital, other forms of property, and it replaces bond portfolios, then why can't it grow by a factor of 100?